Hi, and welcome to Ones and Tooze, FP's economics podcast. Every week we take a couple data points, use them to try to explain the world. I'm Cameron Abadi, FP's deputy editor with you in Vienna, Austria. Joining us, as always, is FP's economics columnist, Adam Tooze in New York. Hi, Adam.
Hi, Cam.
So, a couple segments for you all. Today, in the second half of the show, we're going to be talking about nuclear proliferation. But first, something more cheerful, actually not, given the state of the world these days. Not too much cheery to talk about. So we could not get away, though, without addressing the turmoil in financial markets. And the data point there is 4.38. That's 4.38%, which is the yield level that the 10-year Treasury, the U.S. Treasury, has risen to. Just last week, as tariff concerns rippled through financial markets around the world, that 10-year yield advanced 50 basis points. That is the most in more than 2 decades, apparently.
Everyone's got the same question. Evidence of bond trades blowing up, or are you starting to see people distance themselves?
Take a look at the 10-year today, climbing some 50 basis points. Last week alone, as you know, the biggest one-week surge in over 20 years. This morning seeing some relief, though, as we work our way back to 4.4. These tariff headlines seemingly changing every day. How much more volatility should we expect?
This was all very clearly a problem if you were reading about it in the press, even if you didn't entirely understand what it all meant. And I certainly include myself in that group. You know, I'm hoping we can talk about the problems on the bond market, Adam, but I admit I will be seeking some, basic comprehension here to understand what's happening and the significance of it all. I mean, it seems to me we only hear about the bond market when things are panicking in general. And I'm curious why that's the case. Although we were just talking before we started recording, and you were saying how it's not the Treasury itself that may be the problem on the bond markets, but a few other kinds of bonds on the bond markets. But am I right to say that we only talk about the bond market, like at least, normal people like myself, kind of civilians in this subject, when things are panicking? I mean, why is that exactly?
Yeah, no, this is a great question and a great place to start figuring out a really tricky area. And I actually remember the moment in my life where I realized the penny dropped. Oh my God, it's actually all about the bond market. It's like, for me, it was 2011, 12 when this realization sank in deep. And yeah, just to get things in proportion. So in the US in particular, we obsessively follow the equity market, the stock market. That's shares in companies that give you a right to the dividend of the company, the profits that it's distributing to its shareholders. And those shares go up and down with the particular value of the company, whether you think it's going to do well on AI, and with general sentiment about the economy. And that's a market of $52 trillion in terms of value, $53 trillion, depending on where the markets are. And almost exactly the same size is the market for tradable debt, not loans that banks make, but bonds, which are Germans will call them Wertpapiere, so paper values, which can be bought and sold and are effectively debt certificates. And the difference between them and shares is that they entitle you to full repayment at maturity and to a fixed rate of interest in the meantime. And this is where we come onto this issue of panic, because classically, when people are stressed, they run out of equities whose value fluctuates depending on how we think about Apple's iPhone prospects, into bonds, even Apple's bonds, because you can stay invested in Apple, but what you'll get paid in terms of dividend from its share will depend on how much profit it makes. And what you get paid from the bond, the money that you've lent to Apple, will not vary. It'll be the same. Correspondingly, of course, the rate of return on the bonds will be much lower. And so the largest single class of bonds, so there's about $53 trillion worth of bonds outstanding. And of those, $22 trillion are publicly traded and rising. So it's 22.58 right now, last count, and it'll be keeping on going up. 22.58 trillion is government debt. And the longer end of those, as you were saying, Cam, is currently attracting an interest rate of 4.3%, something like that. If that's all you got from investing in shares, you'd feel pretty sorry for yourself. But on the other hand, that 4.3% you're definitely going to get if you buy them now at the current price. That's the rate of return that you'll make. So this is how shares and bonds function as risk substitutes. So people will balance a portfolio. Classically, a 60-40% split is common, where you take risk with one chunk of your portfolio. That's the equity side, where you're exposed to business fortunes. And then you plump a nest egg into bonds, which will yield full repayment at maturity plus promised interest rates. And when panic hits, the balance shifts, and you'll hear people talking about de-risking. And what that means is that they're moving their portfolio. I mean, people could go to cash, but that's a really bad symptom, and we'll come back to that. But what they'll tend to do is just shift the balance of their portfolio out of equities towards bonds. So this is why bonds are associated with panic. Another thing to say about bonds before we get into the drama of last week is because they have simple specifications, or at least seemingly simple, the amount that's owing, the years to maturity, the rate of interest, the coupon that's on the bond, they lend themselves to financial engineering because they're not, in fact, entirely uniform, and they're traded in weird ways. But at least notionally, you can model a bond as a financial asset in a way that lends itself to modern mathematical finance, because it's an entity with really fixed properties, so much face value, so much coupon, so much maturity. Whereas equities, literally are slices of the future prospects of virtual reality headphones and iPhones and laptops and music streaming. That's Apple. And how on earth do you really model that going forward? Whereas a 10-year bond is a 10-year bond for a certain value, certain coupon, and so on.
A comprehension question here, and maybe this is a public service to folks. There are bonds that we're talking about and government debt. And then is that the same thing as the value of the dollar, which we're also hearing about?
Yeah. So third factor is when you're making an investment decision is where do you put your money country-wise, worldwide, right? So when you invest in a country, you have to, we might think of putting our money in the bank account, but that's really not a reasonable way because the banks just gouge you as a saver. So you buy some sort of investment in that country. And so you would buy either shares or you would buy bonds, and you could choose between different types of shares, different types of companies, or you could choose between government debt or private debt. We'll come on to that distinction in a minute. But when you do that, you are always making a choice about which country to invest in. And perhaps most of us, because we just, we have what's called home bias. When we think of, insofar as we think of investing, we generally just think, well, I'll plonk my money in my local currency, in my local stock market or local bonds. But if you are disposing of a big portfolio, you actually have to ask yourself, where am I going to put this money? And that's where the foreign exchange market comes in. So the rate of return that you earn is always relative to where you are, what currency you ultimately want to get paid out in, and which currencies you've put your investment in. So since the largest pools of investment tend in the end to want to pay out in dollars, an awful lot of investment opportunities worldwide are ranked in terms of how they do when cashed out in terms of dollars. And obviously, when you invest in the US itself, you don't have that element of risk or opportunity because the dollar can't vary in value against itself, so long as we're talking about a unitary monetary system, which sometimes is put in question. Big abstract hole we don't need to go down. But you could choose to invest in Chinese government debt, you could choose to invest in German government debt, or you could choose to invest in American government debt. And if ultimately you're going to pay out, say, the pension fund needs to pay out American pensioners, then they'll take a risk on the euro and the renminbi, respectively, if they make those investments. And so these things sometimes vary along with each other, or they vary in offsetting ways. And what investors will look for is the combined effect of those movements. So if I buy a portfolio of European investments, if I stick it in shares, I have one set of risks. I might offset that by buying bonds. And then your next question is, say the share market goes down and the bond market goes up in a compensating development, which is quite typical because people run out of shares into bonds. What happens to the euro? Because as an American investor, that will decide what my overall rate of return is. And what you want to see, generally speaking, and this is one of the correlations that broke down last week in a really alarming way, is that as people run out of shares and into bonds, and the price of bonds is bid up, ideally, what you don't want to see is a panicky exit from the currency that goes along with that and offsets it, right? Ideally, what you want to see is confidence being expressed in the currency, even as the share market gets wobbly.
Got it. Now, to turn to the specific effects of the turmoil last week on these bond markets. I mean, the phrase that you used in one of your newsletters was, or at least raising the question of whether people were selling America. They were basically deciding in general that America was no longer something that was worth investing in. I mean, what does it mean to put it in general terms about that a country needs to be sold off in that way when the financial markets treat it that way?
Yeah, it's a cascade, and it's a really nasty cascade. And it starts with normal behavior, which is we sell shares, and everyone just kind of goes, shrugs. Okay, America's going to have a recession. You don't want to be in corporate America anymore. Makes sense. Okay, I'm expecting you, however, to go into bonds now, right? That's what you're going to do because that's the safe place to go. And what we saw last week was some of that, but the shifting out of shares into bonds was overwhelmed by a lot of people selling American bonds. Now, that's in and of itself extremely worrying because that's basically saying, I don't trust either of the two major asset classes here. And then, and this was the really spooky thing that happened on Thursday, is that as people sold American bonds, the price of the bonds goes down and the effective interest rate you therefore get, because each bond, say it's saying it's going to pay 5%, right? And it's a $100 bond. You're going to get $5 worth of interest payment off that bond. If you only pay $95 for it, the effective interest rate, the so-called yield, is higher. So if you're in a market where people are selling the bonds, perversely, this doesn't make a whole lot of sense, the interest rate is going up, right? So the yield is going up, trying to drag you back in. Now, the saving grace we would expect to see is that as American yields go up, people around the world, and indeed Americans, go, hey, yields are going up in America. I know there's panic right now, but it's at a place where I can earn a high interest rate. People should be flooding into the dollar. And this was the third hit, was the dollar actually went down. So we saw the stock market selling off. Normally you'd see the bond market go up. It went down. That drove interest rates up. Normally that would drive the dollar up. And in fact, the dollar went down. And so what that is basically telling you is that people don't want American shares. They don't want American bonds. And they don't even want American cash or things which are close to cash. They just basically want to be out of the dollar. This is why the sell America phrase began to take off. So all of the markets are going in the same direction, which is, in a sense, the sort of Newtonian promise of market economics is that if one thing goes down, something else will go up and the whole thing will balance. Instead, what we're seeing in this case is everything's selling. And furthermore, when this happens, I mean, this is a terrible sign, and this is the sort of thing that happens to emerging markets. Basically, people are saying, well, Turkey looked great 2 years ago, but right now I can live without Turkey. I'm just going to empty Turkey out of my portfolio. That seemed to be the direction we were heading in last week. It hasn't sustained, but that was the direction we seemed to be heading. The next thing that happens is kind of a more meta thing, which is, since the market is famously full of very smart people constantly trying to optimize, they've all built into their models assumptions like if the stock market goes down, the bond market goes up, or if the bond market goes down and the interest rate goes up, well, then at least the dollar goes up. And their models are premised on these correlations. And when the correlations break down, not only do we have a panic, but we have kind of a meta panic, which is people panicking about other people panicking, because all of their strategies, which are kind of indifferent to whether things are going well or badly, they're just based on a correlation. If that goes up and this goes down, I'm going to make money on the difference. All of a sudden, the up and down mechanics are not working the right way, and all of those trades unwind. And then if you add a third element into this, which is that the truly heavy-duty speculators don't do this with their own money, but borrow people's money on the basis of a correlation which they see in the market. If that correlation breaks down, the money that you borrowed is no longer going to be repayable on the terms that you expected on the basis of that correlation that you had built into your investment model. And so then the creditors of the people who speculate panic and go, because I see someone panicking and I see people panicking about panicking, I'm panicking about the money I lent to you. So let me be the first to get my money back. Thank you very much. And then the system begins to develop the characteristics of what you might call a kind of collective bank run. And that's the nightmare scenario. And we're talking about huge volumes potentially of money sloshing around in these cases.
So, yeah, I can certainly understand that in some level panic is self-fulfilling.
It's contagious and it spreads and it yeah.
But at the root of this, it sounds like on one hand, there's some kind of there's some people in the market making a financial assessment about the health of America in some level. And then it sounds like you're describing there's almost like a mechanical effect among some investors. They have to kind of get out of this once things start moving in this direction in the way, the perverse way you're describing. And I'm curious, though, if there's another group of people that are motivated themselves by politics. Like, are people selling off America around the world almost as a kind of political retribution of some ways, fighting back against the Trump administration, which has obviously been aggressive in its own way?
So, everyone could do the math on that, and everyone's watching the market with exactly that hypothesis in their head and going, when are the Chinese going to sell? So that fantasy has been there for as long as China has been a large owner of American US government debt since the early 2000s. And a lot of the action and the drama last week was in the US Treasury market. So that whole story I was telling a minute ago about how you go out of shares and into bonds and so on, the bonds you go into if you really want to minimize risk and you are pessimistic about the US corporate sector are US government debt. Widely talked about in conservative circles as a kind of nightmarish source of instability, actually everyone's last resort safe anchor asset in a situation like this. And the Chinese, since the early 2000s, because US treasuries are that universally saleable safe anchor piggy bank asset, have bought lots of them. People disagree about how much. It's quite clear they used to have more. They now have less. The official numbers are slightly less than $1 trillion. It peaked far higher than that. And the suspicion is they've actually got far more stashed away in the bank accounts of the big policy banks in China. But they've got trillions of dollars for sure. And we could get into what's happening to their currency, maybe not on this program at another time. So we know they might be it might be handy for them to have some dollars. So they might have a reason for selling like other people. But what we haven't seen so far is really overwhelming evidence of that going on. And that's true to form. In 2008 as well, there were a lot of rumors. There was, in fact, a fairly well-attested story that Putin in the Kremlin tried to get the Chinese to concert with Russia. And Russia did sell down its US assets, which had accumulated through exporting oil. And China just refused to join them. And there's not any evidence so far that the Chinese have pulled that lever. The main culprit appears to be the private speculative mechanisms, complicated trades. They're tiny margin trades, but the hedge funds do them at huge scale, 800 trillion, we think. 800 billion, which in relation to a day's trading in the Treasury market of $1 trillion if all of that sells in the space of 2 or 3 days, it's a big unwind. And those trades are strongly based on assumptions about correlations, about volatility in this market, and all of those assumptions have been challenged, and they are leveraged. In other words, the hedge funds are betting with other people's money on a whole variety of different things. They're being stressed by margin calls, either on the Treasury trades or on other trades they've made. And the Treasury bit is the bit that's easiest to sell. And so that's the piggy bank they smash. And then we see this perverse spiraling in the Treasury market. And it gyrates. I mean, it was going up and down. You cited that figure down to like the second decimal point. That's because Treasury markets generally don't move by more than second decimal points. And they were moving by 0.1%, which is alarming for a market which, in terms of freely traded assets, is 22.5 trillion. That's oceanic, right? So 1 trillion trades a day on 22.5 trillion. So if that's able to move the price in that market by, things you can see with the naked eye, it's really worrying.
Again, a basic question, which is, how does what's happening on the bond market in this way concretely affect life in the United States? I mean, like, on one hand, it seems like mortgage rates go up. That's one thing that affects life in America very clearly. But in what other ways does the bond market affect normal Americans and how they go about their lives? Or is that the wrong way to think about the bond market? Is it kind of just operate in the background until it collapses and has catastrophic effects in that way?
So it's the foundation of the entire interest rate structure. So all the other interest rates are essentially hinged to this one. And so whatever interest rate you're paying or whatever credit you've got outstanding will be over the not too distant time horizon affected by these movements. So if they're substantial, it's very significant. It also affects people's situation as taxpayers, because the higher the interest rate the American or any other government pays, the more stressed the fiscal balance is. And then this also ripples into the corporate sector. So the story of the Treasury market is that despite the fact that there was this genuinely worrying day, Thursday, where everything moved in the wrong direction, that was Thursday last week, the Treasury market has largely stabilized and attention has shifted to smaller markets, but which are much more directly connected to the real economy. So if you look at the bond market overall, we're still talking about bonds here, but if you look at the bond market, so it's $53 trillion, half, not quite half, $22 trillion of that is treasuries, bona fide treasuries. Then there's things called mortgage-backed securities, which are the story of 2008, right? These are mortgages packaged together to make bonds. They're about $13 trillion, something like that. And the bit that I'm focused on here is the corporate bonds. So these are debt issued by companies. This is how they finance investments in things. And after all, this whole tariff story, again and again, we've been coming back to this. The whole point of economic policy is to stimulate private investment. So this is a major funding source for private investment. That's about $10 trillion. And within that, there's an awful lot of very high-grade stuff, which trades at yields which are barely more than those of the US Treasury, sometimes even better than the US Treasury, because people think that those companies have got, even brighter, more stable futures. But there's a chunk of the corporate debt market. At any given time, it's 10-15%, which is high yield, which is, in other words, loans to companies, bonds of companies, which are less than entirely bomb-proof. This is the sort of debt which is also called junk bond debt. And what it just is, it's just like subprime mortgages. It's just debt which doesn't conform to the very highest credit ratings. And those markets are not just trading at higher yields. So, brands like Saks, for instance, the yields on their debt in exposed American high-end, retailer as high as 20%, like credit card yields, like crazy. But the market for new issuance has just stopped. You can't issue any new bonds. And normally you would expect a flow of 100 million over the year, 100 billion over the year, 150 billion over the year, something like that, into that market, which fuels entrepreneurial activity. And it's just dead as a dodo. And so that is a blow to corporate America. And then lurking in the background, there is the nightmare fear of the unraveling of some structured finance vehicles that are deeply and darkly reminiscent of the 2008 mortgage disaster in this space in particular, because what securitization, what financial engineering does preeminently is take relatively high risk stuff and change its, or at least notionally change its risk profile by packaging it. And they've done some of that to this high yield segment.
That does sound scary. And I guess the question that comes to mind in general, not only relating to this specific part of the bond market, is whether the crisis response mechanisms are still in place, of the kind that, you've written about, that were in operation in the pandemic, that were in operation during the great financial crisis. I mean, obviously the Trump team is eccentric and not following the standard rule book in all sorts of ways, but are the institutions that have responded to these crises when they really go haywire in the past, are they still ready to respond to these kinds of crises? Are they still in place?
I mean, I started this week worrying about that. I sat down the weekend and tried to take stock after last week. And that strikes me as the next question. I think you're absolutely right to go there. It's a question about the Fed and it's a question about politics. And it was very telling that the rally that happened at the end of last week in the share market, the stock market, also in bonds, but it rippled all the way through to the share market, was on the basis of an interview given by one of the regional central banks. So Powell and people like that in the Fed board are really keeping and being tight-lipped. But this was a regional central banker in the US who said that she was very confident that, the crisis intervention mechanisms were ready and they were ready to go. And I think that raises two questions. I mean, what would be the trigger and how big would they go? The trigger could consist of two things. If we saw everything selling, shares selling, treasuries selling, and the dollar selling for any extended period of time, you would expect intervention, especially if the market on the basis of that then became disorderly. So if treasuries no longer don't trade smoothly, it's one thing if their price is going down and the yield is going up, well, fine, fair enough. But the really terrifying thing is that even for a short period of time, there isn't a price at all. In other words, somebody wants to sell and no one wants to buy at anything like a remotely reasonable price. And the Fed would step in to fill in the market, if you like, to just be a buyer of last resort. So that would be one trigger. The other trigger would be any signs of stress within the pyramids of credit that are the private financial system. And those could originate in this leverage loan, high yield junk bond market and in the structures piled on them. These things called CLOs, which are a little bit like mortgage-backed securities. You take a bunch of high-yielding corporate debt and structure it in a bigger bundle, and then you sell shares of the bundle, and only in the event of very large amounts of it all simultaneously defaulting do most of the investors have to take any risk at all. So you take high-risk debt and transform it into low-risk debt and concentrate the risk that's there on a small number of investors who really, really want to take the risk. And the question then is, where did they get their money from? Because if those investors are real money investors, in other words, they actually have funds from rich individuals or fund managers, they can just take the hit. And, that's sad and there might be lawsuits, but it's not a systemic risk. The worry is, did they borrow the money they invested and did they borrow on a large scale? This was the problem really in 2008, was not the mortgage-backed securities themselves, but the fact that investment banks had large portfolios of them and they were funded overnight. And then you had a giant bank run. And that will be the trigger, I think, in private and debt markets in the US right now is this simply burning a bunch of rich investors who made bad deals and are now sucking it up? Or will it threaten a series of credit-based relationships and thereby threaten something like a bank run in the private financial sector? And if that were to happen, again, the Fed would step in. So this would be like a Silicon Valley Bank type scenario. Those will be the two triggers. And if they do, and if they don't, and whether they do and whether they don't, expect an absolute shitstorm of politicization to break loose in this current moment. And I spent some time at the end of last week reading, finance Twitter across the political spectrum. And there's a lot of, Trump bros out there. I imagine they're all bros, on finance Twitter sounding off. And they are already prepping a story about how the Fed is hanging the Trump administration out to dry and won't invest, and the panic is in fact Democrats, because we used to, of course, complain that the Republicans were crazy about Joe Biden's economic record and two can play at that game, so they're now playing that argument back at the liberals. This argument of when a panic is a panic, when a crisis is a crisis, is inherently political. And right now there's no doubt, I think, that as much as this hurts, liberals should own this, that there is an element of schadenfreude, there is an element of gloating going on, which is, oh, well, Congress may fail and the Democratic Party's a bust and the Trump administration may override the courts. And in the end, maybe it's going to be the Treasury markets that will be Trump's comeuppance. And this is where he's really going to get the slapping that he needs to put him back in his box. And that may transpire, but don't expect the Trumpians in the financial markets to take that lying down. They see that and call it. So it's really politicized all the way down at this point to a startling degree. Even at the level of analysis, there are people at JP Morgan who are censoring their commentary on the financial markets because they're worried.
I mean, I wanted to ask that which way the politicization cuts, and maybe this could be a way to wrap up this conversation, because it sounds like you're suggesting the Trump team to whatever extent it is a coherent team, and I guess maybe that's the point, it may not be, would want intervention in any kind of looming crisis. But I also wonder if there's a kind of is there some part of the Trump team that is experiencing schadenfreude of its own in seeing the crisis happen and sort of seeing the financial world melt down? Is there a kind of death drive among some part of the Trump team that I mean, you've openly, there's always been talk of wanting a weaker dollar, but maybe does that even sort of extend to wanting America not to be the kind of hegemon of the financial world the way it has been? I mean, how does the politicization cut in that direction, if at all?
I think you're absolutely right. I think, one has to differentiate the kind of chaos crowd that actually kind of relish the prospect of some kind of meltdown, the folks also that kind of quite enjoy fantasies of shutting down government, that kind of wing. And there's no doubt that a sudden stop in the financial market would aid and abet that project. But it's all, I think, in the manner of the doing and how this unfolds. You're absolutely right as well that there's a squad within the Trump administration that wants a weaker dollar, by which they mean a lower exchange rate of the dollar against currencies in which America trades competitively. There aren't that many people in the Trump administration so far who want an end to the systemic role of the dollar. There are some, because they see the dollar overvaluation as an effect of that. Trump himself has been just contradictory. He said he wants a weaker dollar and he wants it to remain at the center of the system. Sorry, I say that's contradictory. It's not contradictory in the long run, but it could be contradictory in the short run, in the sense that a disorderly unwind of the dollar would, in fact, threaten its role at the center of the system. There's another position that actually wants the dollar to not be at the center of the system and to be weaker. You could do, I think, a kind of 2x2 map of the options here. The short answer is we don't know, but if things began to get really serious, and in the Treasury market meltdown scenario, that's about as serious as it gets. That's a bigger financial crisis than 2008. We know this because the interventions in 2020 in the COVID crisis, when the Treasury market did almost melt down, were 10 times larger than the interventions by the Fed in 2008. That's a measure of how much more serious this is. If that was actually happening, I think it's implausible that the Trump administration would not be craving Fed intervention. And frankly, I think it's also implausible that the Fed would wait at the margin, right? It's just too dangerous. They would act. But then there would be a huge post-mortem about why they had taken as long as they did to intervene and so on and so forth, right? So at the margins, it's all about the margins, like who is edging who out at this point. Whilst, as you can gather from my, rambling comments a second ago, like the big picture is like completely, we don't know. We really genuinely don't know what they want.
And you can't trust anyone entirely.
Yes, exactly. Even when they tell you, there's absolutely no idea whether they mean it.
Well, exactly. You can trust us here on Ones and Twos. We're giving you our best assessment in good faith. But we should end this conversation here for now. We will be back to talk about the more cheerful, less cheerful, I don't know, topic of nuclear proliferation in just a second. Hi, welcome back. Our next data point is 12,331. That is the number of nuclear warheads as estimated at the beginning of 2025 in the entire world. That is 12,331 nuclear bombs held by 9 countries, although the vast majority of those bombs are held by Russia and the United States. They have about 88% of the global total. Though I should say that's the current global total estimated, because that number may soon rise. The topic of nuclear weapons proliferation is back in the news, with a number of countries speculated to be next in line to want to acquire nuclear weapons. That's a result of a shift in America's foreign policy, with the Trump administration withdrawing its support, whether implicit or explicit, for various allies around the world. And those allies, as a result, are interested in pursuing nuclear weapons as a means of self-defense. Those countries include Poland, where The prime minister most recently raised the question of pursuing nuclear weapons, but also elsewhere in Europe and now in East Asia. And Iran, of course, has had a nuclear energy program for a while, but is openly talking about maybe pursuing a weapon at some point as well. So we thought we'd take a closer look at the economics of nuclear weapons. And I should say a quick thank you here to our listener, Marcus Schafrath, who sent us a request to cover this topic. So, Adam, to start off with, I wanted to ask whether countries can easily afford to build and maintain nuclear arsenals of this kind. Obviously, there is a military logic to having nuclear weapons, but in terms of the economic logic, what are the costs involved? And are they commensurate with the levels of threat that the weapons are actually meant to counter?
So yes, the nuclear movement, following what you might think of as a kind of obvious move, says, well, these things are very expensive. They cost an obscene amount of money, and they are themselves obscene. And so there's quite a lot of numbers out there for the level of nuclear spending. And we think right now in 2023, the 9 nuclear armed nations, that's the official ones and the unofficial ones, spend maybe $92 billion, something like that. Say it was $100 billion. These numbers are from 2023. Say it's gone up a bit on nuclear weapons. If you look at the US over the next 10 years, we have rather good estimates of the proposed budget. And there's a proposed budget over the next 10-year period. So from 23, that was going back a little in time, to 32. That's 2032, of $756 billion, of which 300 was going to go on maintaining the existing force, 250 billion, roughly speaking, on modernizing, and then 100 billion on facilities, and then add a bit on for cost growth. But say it was, 750, something like that. The problem is when you break this down over 10 years, you come up with, I don't know, $75 billion per annum. And then when you place that in relation to US GDP, 25 trillion, or you place that in relation to the defense budget, say pushing $1 trillion, the ultimate guarantee of national security, which is the nuclear triad, that's missiles, aircraft, and submarines, is coming in at like 7% of your defense budget and a really rather small fraction of GDP. And so the short answer to your question is that in terms of, providing you with a disputable, no doubt, morally disputable, practically disputable, nevertheless, qualitative shift in the type of defense and security and deterrence capacity you enjoy, nuclear weapons are quite cheap. And that historically was always why they were pushed to the extent they were, right? Nuclear weapons and mutually assured destruction and that whole logic of deterrence was adopted in the 50s by both the Soviet Union and the United States, not only because they were in an arms race and they needed to match each other, but because by comparison with conventional forces, building huge armies and maintaining them World War II style or Korean War style even in Europe in the 50s and 60s, that was prohibitively expensive, and the so-called New Look that began with Eisenhower was relatively cheap. Now, each individual weapon's expensive, the missiles are expensive, the aircraft are expensive, but for the qualitative shift you get, they are actually kind of cheap. So you could say, well, this is all just about scale, right? This is because the United States has got scale economies. It can do armaments on this scale. Its entire defense budget is pushing $1 trillion, so it can afford this. So let's look at France. And if you look at the French nuclear deterrent, which is sophisticated, it's not a full triad, but it's got aircraft and submarines are the real key because they're so hard to kill. But this defense, and we're, again, we're a little uncertain about exactly how much they spend, but it would be surprising if nuclear defense accounted for more than about 20% of the French defense budget, which is in the the standard European level of 2 to 3% GDP. So the French are getting something that would make them very indigestible to anyone who attacked them for much less than it costs to build a conventional army. Take India, which is, the bottom of the nuclear pecking order, not quite at the bottom, but close to it. It's very difficult to figure out how much they spend because it's a quite closely guarded secret. But most people seem to think it would be surprising if they're spending more than $3 billion a year to be part of the nuclear club. And for a country of India's standing with its current GDP, it's a total no-brainer. If you can get away with it and you can mobilize the technology, you should go there. And that's the deep logic behind both the North Korean and the Iranian positions. These people aren't crazy. These people are buying themselves both are, I mean, North Korea is more of a stretch, but Iran has easily got the technological level necessary to push to this level. It's a political diplomatic choice to not make that move, because in terms of giving you that spiky, you really don't want to mess with us in the final instance. You don't want to do in Iraq with us or Libya with us. Having the nuclear deterrent puts you in a different position. And so at that level, economics aren't going to be the obstacle here. If you can run a sophisticated just electricity energy program, anything like that, you can make this move. If you really wanted a minimal American defense strategy, it would, after all, be to shrink everything else out of the picture. Just leave yourself with a fleet of basically invulnerable atomic submarines scooting around the bottom of the ocean and dial everything else back. You could have that kind of defense for, well, you wouldn't even, you would certainly could have a couple of $100 billion and easily get there. I'm not advancing that as an attractive scenario, but if all you want is that basic line of deterrence, nuclear option is relatively cheap.
Yeah, I'd love to discuss deterrence in more detail, but I do want to ask first, as you just mentioned, this is obviously a highly sophisticated technological achievement, creating a nuclear arsenal, but it also has a commodity at its heart, uranium or some other kind of radioactive material. And I'm curious how the price of uranium, say, could be affected by further proliferation of nuclear weapons.
I mean, you might think there'd be a big impact because if you start with uranium to get to plutonium, you have to concentrate the stuff, right? That's what all of the centrifuges are about in Iran, is getting you there. I mean, it's like a massive compression, about 25-1, something like that. But if you look historically at the flow of uranium and the current demand flows in the early history of uranium mining from the 50s through to the early 70s, it was predominantly done for weapons purposes. They mined, rough guess, looking at the data, maybe 500,000 tons worth of uranium were dug out of the ground and stockpiled for military use. And at the time, the nuclear reactor programs weren't really growing at scale. There were early experimental reactors, but it's really from the 70s that nuclear reactor demand takes over. And to answer your question, in the current moment, weapons demand for new uranium is a tiny fraction of the overall uranium market, which is live, which does have price fluctuations, but it's utterly driven by the demand for nuclear reactor fuel. There's about 440 operating reactors. In total, that fleet of reactors needs about 70 to 80,000 tons of uranium. Exactly what the numbers are depends on how you measure the uranium, what concentration, what chemical composition you're looking at. There's a gap, however you measure it, between that annual demand of 70 to 80,000, say, and annual production from mining of 50 to 60,000 tons. And that is filled by stockpiles. There's about 250,000 tons stockpiled, and even by some cannibalization of weapons-grade plutonium, which if you reverse the concentration process, to put it crudely, you can end up with reactor-viable fuel. And so that's really what drives uranium price fluctuations. So it's the prospect, and that was quite real, and you could see it in the uranium prices of major reactor programs taking over in the last 5 years or so, in the context of being serious about the green energy transition. Various people want to make a play on reactors despite their exorbitant cost. But that is what was driving the uranium price spike for a while. It's not weapons, it's reactors.
Okay, so to turn back to the question of deterrence, obviously nuclear weapons are only as good as the credibility with which they would be used. And I'm curious, how does a country make it credible that it's prepared to use weapons that it might have? That's the prerequisite to deterrence, right? The credible threat of using them. So how does that work in practice? And does that practice of credibility put into question concepts of extended deterrence, basically relying on another country to serve as your nuclear umbrella, so to speak?
Yeah, because if you really want to push the economics of nuclear weapons to the limit, they're basically a fixed cost. You build them, so why not just have one alliance partner build a bunch of nuclear weapons, put them at sea in submarines, put them on bombers, put them on missiles, and then everyone else can basically huddle under the umbrella, and you get incredible economies of scale in defense. And that is the logical way of organizing defense. But the question then is, who belongs under the umbrella really, and are you willing to take the ultimate step of pressing the button? And for listeners of a certain age, if you enjoy these enjoy in a macabre kind of way these Cold War games, there is a deathless episode of the British political comedy show, Yes Minister, or it may even be Yes Prime Minister, Search for Salami Tactics, in which an inevitably Central European emigre science advisor to the British hierarchy takes them through the question of, well, if there was a border infringement in divided Berlin, would you press the button, Prime Minister? Well, if the Warsaw Pact launched an invasion of West Germany, would you press the button, Prime Minister? And again, the Prime Minister quite sensibly flinches from the reality that at some point you have to be willing to press the button. So how do you anchor this? And I think there were like 4 basic commitment devices that have been kind of thought through. I mean, one is lots and lots of solemn commitments. I mean, this is, if you like, a kind of commitment to credibility or credible credibility. And it has the recursive logic that the Yes Prime Minister episode unpicks so nicely, which is ultimately you persuade yourself that you'll do it, press the button, to persuade other people that you would press the button. So you do it because you have to do it. And that, of course, ultimately doesn't provide a powerful rationale. But again and again and again, if you look at economic policy decisions, they're routinely made in terms of we need to do this to maintain credibility. That analogy fails, of course, because one is an interest rate decision and the other one is pressing the atomic bomb button. So the next strategy for making this extended deterrence strategy more credible is to reduce the hurdle to doing the unthinkable. So one thing you do is just make it cheaper, have a strategy of not immediately end of the world deterrence, but smaller steps. So tactical nuclear weapons, medium-range weapons, all of the big politics of nuclear rearmament in Europe in the 70s and 80s were about inserting these intermediate steps, because no one in Europe believed that American presidents would be willing to end the world for an infraction of West German sovereignty. But maybe they'd be willing to fire a cruise missile. And if they fired a cruise missile, then the Soviets would take you to the next level and you could stop worrying about American motivation. The third thing to do is to put your own people in harm's way. In other words, create your own human shields. And that classically was the function of American troops positioned on the ground in Europe, to make deterrence plausible, not because you actually hoped to fight a conventional war, but because if you put American conventional troops there that would be overrun by the Red Army and the Warsaw Pact, then there was a credible promise that the Americans would escalate to the nuclear level to save their own troops or to punish the Soviets for the assault on their own troops. That then in turn made nuclear deterrence credible, and then the Warsaw Pact wouldn't attack. Whereas if the Warsaw Pact didn't think deterrence was credible, they would attack. So the way that you make it plausible that they will go for the nuclear weapon is putting men in harm's way. And then the fourth way of establishing credibility is mad dog strategy. So basically, and Ronald Reagan was the arch exponent of this, which is read my lips, believe me, there is something more important than life, and I am willing to sacrifice for it. So it's a heroic posture. It doesn't say follow my chain of logic. It says don't follow any chain of logic. It says just believe that I actually believe it's true that I'd be better off dead than red. Don't even think about the possibility that I might kind of do some backwards induction on this and conclude that maybe I would rather be red than dead. No, don't. We're not going there. In the innermost fiber of my being, who I am tells you, crucially, that you should believe that I would indeed be willing to die for freedom, whatever it is, right, for the principle. And so then we never embark on the strategy of trying to think through the incentives, because we just conclude from the very beginning, touch this dude and he'll end the world. And so I think those are the kind of 4 elements of rational commitment, smaller steps, harm's way, and mad dog kind of claims.
Yeah, that is remarkable. I suppose those all fall under the category of facing existential threats. I guess that sort of puts into context that nuclear weapons are not going to deter all kinds of security threat. I mean, lower scale threats are not necessarily then something commensurate with that scale of strategy, but...
Yeah, I mean, listen to Reagan. It's unbelievable. This was a speech from the 60s. You know, should Moses have told the children of Israel to live in slavery under the pharaohs? Should Christ have refused the cross? Should the patriots at Concord Bridge have thrown down their guns and refused to fire? You know, the martyrs of history were not fools, and our honored dead who gave their lives to stop the advance of the Nazis didn't die in vain. Right? So the road to peace is to cleave to this promise that we get peace through strength. And the strength is both a real strength of weapons and a spiritual strength of the willingness to actually sacrifice. This was a candidate running for office. I mean, he's on video. There's this amazing video of him saying, yes, I'd rather my children were dead than red.
I mean, yeah, I certainly believe it. It's just that scale of drama is usually just not something I associate with foreign policy of all kinds, you know?
If you watch the YouTube, and one of the most amazing things is the music that people have set to Reagan's speeches. And it totally goes to your point. They create this entire Wagnerian atmosphere.
Nuclear war would be the greatest tragedy, I think, ever experienced by mankind in the history of mankind. And we've avoided that tragedy because we've maintained a credible deterrent force. We can't afford to play political games.
And the point I'm making here is not to be cynical about that, to actually say it has a rational logic, which is that if people believe you are this way structured, they're not going to call your bluff. This is also the great Reagan thing, is we have to pretend to be this way to actually quite reasonably then emerge in a world in which we never have to do any of this, and deterrence is cheap. So we have to promise to be utterly idealistic to the point of death so as to achieve a resolutely materialist goal of never having to do any of this.
I'm getting a sense that this is partly, at least, why Germany does not have nuclear weapons. I just can't imagine German politics operating in this register. But I guess to shift to another topic, I'm curious about the economics involved in figuring out solutions for nuclear waste, because that is an unavoidable byproduct of nuclear weapons production. And in thinking about the waste involved and the economics, it got me thinking in two ways. One, about the kind of sociology involved in finding communities willing to host this waste. That seems to be a perennial problem. And then also sort of thinking through the economics of dealing with the risks for generations afterward, and how to communicate the risks of waste that remain dangerous for many years to come. So, yeah, how should we be thinking about waste in those ways or any others?
It really took me down a rabbit hole when I was researching this. So it turns out there's a huge distinction between nuclear reactor waste and the waste that was the product of the American weapons program. And between 1944, that is, and 1988, when the Americans basically stopped making new atomic warheads. Since then, we've just been managing the existing stock and increasingly running it down from tens of thousands to a couple of thousand now, 2,000 or 3,000. In the process of making that, America refined about 100 metric tons of plutonium. You don't need a lot of plutonium to make an atomic warhead. And the result of that was 100 million gallons of hazardous liquid waste. Liquid waste is the big byproduct of plutonium distillation in the American process. And you're talking about this as a hypothetical, but they stopped this process in 1988. And as far as the largest depository, which is Hanford, Washington State, that is, there is no solution. It's not been fixed. It's just been sitting in huge, in some cases, single liner concrete tubs that they started building in 1944 ever since. And this year, they are supposed to start a process of vitrification, turning this stuff into glass, believe it or not. That turns out to be the best thing to do with it. But right now, right here, right now, leaking into the groundwater from this facility, there is at least one giant vat of plutonium processing derived wastewater leaking into the groundwater of Washington State. Documented, they know about it, it's actually happening. So this isn't something where there's been big mass demonstrations, and your answer to your second question about how you cope with this politically is you bury this deep, you take it off people's radar, no one has any clue this is the case, confuses it with other types of nuclear waste which have completely different etiologies, genealogies, and other destinies. The weapons program waste has been sitting, to the overwhelming majority of it, in this facility in Hanford, Washington, since General Grove decided that was where they were going to do the plutonium manufacturing, a long way away from Tennessee, where they were at Oak Ridge. And he picked it not because of some complicated, the politics of Indian reservations or something like that, which intrude into other dimensions of the American nuclear complex, basically because it was a long way from anywhere. There were no people, a quote unquote, virtually no local population, and a huge amount of water. And that's why it's there. And having made that decision, it's the most path-dependent thing ever. Like, it just sits there. And there wasn't really a plan to move it. And so the idea is, yes, vitrifaction, make it into glass, which is obviously more stable than leaky tubs of water. They've been siphoning it around with tubes, moving it from one tub to the other tub. But no, the basic answer to your question is you bury it out of sight, and people out of sight, out of mind. It disappears from the political scene. No one discusses it. We all know, of course, at some level that there has to be this unresolved question of waste. Does that mean you actually have to have a solution for it? No.
I mean, what you're describing, Adam, is not a permanent solution, right?
Well, that's what you say, but that's with your German hat on. And you say, I sit and look abstractly at this and I say, this doesn't look sustainable. And I say to you, the actually existing state of the American atomic weapons program is this is the only thing they've ever done. They stopped producing new plutonium for weapons in the late 80s. They've not produced any more. And they only this year are beginning a process of finding a more stable physical state with which to contain this highly dangerous material. And year by year, day by day, we know that it's leaking into the groundwater around this facility. So what does a solution mean, I guess, is my pushback. It's like, this does appear to be a solution.
Yeah, in the sense that the timescales are also, in the long run, we're all dead anyway, I guess. So
yeah, I mean, like, we've done the first 80 years. This is going to run for 1,000 years. Like, the first 80 are down. Like,
yeah, it's certainly beyond any single official's election cycle. So
no, it's hopeless, and there doesn't seem to be the responsibility or the urge to act within the political system that says we just can't allow this to sit there. In fact, rather the opposite. The best thing to do at any given moment would appear to be to just leave it there.
Okay, so then to finish off this conversation, I wanted to ask about the topic of nuclear weapons testing. If proliferation picks up and more weapons exist, if you have more weapons, it just seems to me like you're going to need to test them. Otherwise, right, what's the point of having them? And that goes hand in hand with all sorts of dangers, obviously, to explode these weapons that may now be built around the world in greater numbers. So are there any alternatives to traditional testing? I mean, I wonder, are there now more efficient ways of testing weapons, say with computer simulations?
Yeah, the testing story is one of the truly bamboozling elements of this whole history, right? And, I'm old enough to remember a phase when nuclear weapons tests were relatively routine. Open air testing ended with the Test Ban Treaty of 1963, certainly on the large scale. But if you look at the statistics, and they're absolutely mind-blowing, in 1962, there were 140 nuclear weapons tests. Most of them were above ground. That's like one every 2 days. And many of them were airbursts, like high up in the atmosphere. So one of the historic origins of atmospheric science and physical measurement of the atmosphere is in fact a desperate effort by climatologists to try and get baseline readings on what the atmosphere was like before we exploded nuclear weapons in it. And in fact, they got their funding to do the measurements. And this is the origin of climate science and CO2 physical measurement, in part as part of the program of trying to estimate the impact on both the chemistry of the oceans and the atmosphere of this kind of level, this intensity of atomic bomb testing. And we're not talking about Hiroshima bombs here. We're talking about megaton bombs, huge, huge explosions, hydrogen bombs of absolutely gigantic scale, including the ultimate of the Soviet line, which was the biggest explosion ever, which is tens of megatons. So this has come to an end. And since then, the testing that's been happening, the United States and Russia have largely ended testing. The testing that's happened since has been the new entrants to the nuclear scene, India, Pakistan, Korea. But you're right, yes, if we get serious about this again and things come to depend on nuclear deterrence to a much greater degree than they have in recent decades, then this testing question will become preeminent. There's a lot of, apparently the new techniques of testing involve physical tests, which are subcritical. So you don't entirely stop the operation of the bomb, but you stop it from reaching critical mass. And so therefore you can conduct a physical experiment on the architecture of the bomb without testing it fully. And then, as you say, computer simulation is the main means for doing really large scale testing now. But of course, the weapons are useless unless you have delivery systems that work. And with at least one of the national nuclear deterrents that are touted, namely the British reliance on the submarine-launched Trident systems, we know that hitherto every attempt to launch the missile has ended in failure. So right now, Britain has a very expensive deterrent about which we know safely only one thing, which is the rockets don't work. There's a lot of mystery that surrounds not just the weapons themselves, but the delivery systems, which are so critical. This is also the critical issue with the Israeli deterrent, for instance. We're very confident the Israelis have a nuclear deterrent. For it to be really effective, it needs not just to be, aircraft-based or a land rocket. It has to come from submarines. We know the Germans have supplied them with the submarines, which have been upgraded to nuclear capability. The question is, can the Israelis launch missiles off those submarines? And so the crucial thing was finding an American supervised Israeli cruise missile test somewhere in the Indian Ocean in the early 2000s. And that's probably as solid as evidence as we have of the capacities of the Israeli deterrent. They sail their submarines out into the Indian Ocean and threaten Tehran from there. That appears to be the game plan. But a lot of this is very foggy, which is why the Korean rocket tests, the Chinese rocket developments are so crucial, because really the bomb itself isn't that complicated. Building the missile systems is a lot trickier.
We should stop this conversation for now. We will be back, of course, as always, next week. Ones and Tooze is written and edited by Adam and me, and produced by Claudia Tatey. The show is made possible through the support of foreign policy readers and Ones and Tooze listeners, including James Brighton, David Bauer, Margitta Metzger, Nico Plath, Duncan McGregor, Lex, Doug Dimitri, Tobias Burger, Simon Lengerman, and Iman Shamiri. I really hope I pronounced those names right. Apologies if I didn't. As always, we love getting listener feedback. You can leave voice messages on the Ones and Tooze homepage on foreignpolicy.com, or email us, podcast@foreignpolicy.com, or you can tweet us. That's @OnesAndTwozePod. I'm Cameron Abadi. Thanks very much for listening, and we'll be back in your feed next week.